And so with me is Gospel Obele, Chief Economist for Streetnomics. Now, we are looking, of course, at Nigeria's Q1 2022 investment reports. Now, Gospel, let's look at what this said. 4 states in Nigeria did receive some form of inflow, with Lagos taking the lion's share, Anambra and Oyo and Katsina, as well as the FCT. But all of this is not enough to support an economy as large as Nigeria. So leaving Lagos aside, can you give me an idea of what made Anambra, Katsina, Oyo, and the FCT attractive? At this point, even leave FCT aside, because you sort of answered that in the previous segment where you talked about just the positioning of the FCT and Lagos. So let's leave those aside. Anambra, Oyo, Katsina.
Yeah, so I mean, if you think of Katsina, top of mind, it's almost easy to, put an intelligent attachment to why, even if whatever you read online seems to be politically correct, but you can know why technically, due to the affiliation of, those in power and all that. That's one. For Anambra, I personally think that Anambra is a very, very intelligent base for a lot of things to happen. You have, I think, Odisha, Navy, some around that, a lot of cluster around automobile and all of that. So some states actually have huge prospects in terms of human capacity to think through ideas, to produce, but they are probably threatened with the prospect to scale as well, in terms of, so you have a lot of strong business clusters in the eastern part of Nigeria. I've visited about 5 out of the 6 states pretty often, and I've seen the quality of work that's been put in those places by individuals, to get things out for themselves. So you want to think about the positioning there. For which of the states now? So I think that basically for Oyo State, the Commission of Oyo State, I've always been a strong supporter of Oyo State. I don't have anything to do with Oyo State technically, but the fact that it's one of the most emerging and promising states in Nigeria, minus the fact that you have some fairly increased perception of political commitment. The barriers to engagement and entry in Oyo State is very low. That's one thing I've noticed. Number 2, the infrastructure network between Lagos directly running down to Oyo State. In fact, it's surprising that with the Lagos-Ibadan train network, we have more stops in Oyo State than in Abuja, than in Abeokuta, than in Ogun State and Lagos State. You have more stops in Oyo State. And also to tell you that, with the growth and development of that state, since that infrastructure had kicked in, we've seen a rise in, land and property investments, real estate investment, even educational investments as well. We've also seen it's also the context where you have the highest cluster of SMEs, in the Southwest are in Oyo State after Lagos, After Lagos, the highest cluster of SMEs are in Oyo State. So the state just requires a lot of, organization, a lot of formalization of things, a lot of coordination of the markets for you to make, in quotes, formal sense for investors. But in terms of the way the current state of that market now, it's a very promising market, speaking to Oyo State and all that. So I think those are the nuances. For me, Oyo State and Anambra State stands in its own elements to attract investments. Other states are just positional bias and advantage of some sort.
Okay, so it has been suggested that the foreign portfolio investment decline we've been seeing is also directly linked to the fact that there's an increase in the domestic investors, that maybe they're potentially the ones taking over the local financial markets. Is that the situation of things? What are we seeing? How much of an impact is the domestic investor having on this?
We're beginning to see that impact actually. A lot of, if you look at the debt structure too, there's been a lot of rise and conversation around domestic debts and all that. Investors are beginning to come into the fore. Let's also forget that there is also a rise of folks in diaspora, who are sending back home their investments. People who have made monies in more advantaged countries or harder currencies they have a higher purchasing power when compared to the Naira and all that. So you find a lot of people who live abroad buying houses in Lagos, buying houses in Oyo State, because they're also in tune with what's happening. So the dynamics of domestic investment is also a bit nuanced. There's a form of diaspora effect on that question as well. But then again, it's to show that even Nigerians are also believing in the potential of Nigerians more than the foreign counterparts or the Western or whichever counterparts you want to think about. So, and that's actually promising. It's just for us to coordinate that, unlock the systems that drive or enable that productivity, so that the perception and the potential can move into actual promises, actual promises that people can see and invest some form of commitment into towards that. and then it brings some very good returns for them. So those are my thoughts on this particularly.
All right. So you did mention elections and, of course, the political sort of atmosphere around all of that.
Yeah.
So let's talk about that as we wrap things up. The country has entered election season now, and it's ultimately a time when most investors will sort of step back and wait to see what the dust settling looks like in the next few months when Nigeria chooses a new president. But what do you think the disposition, or what do you think those who are looking to invest in Nigeria in the coming year, in the coming months, are going to be looking at as this election season gathers storm? What kind of comments, or what kind of, I dare say, quote unquote, body language, as we like to use in Nigeria, will they be expecting from the candidates when it comes to issues around investments, foreign direct investment, foreign portfolio investment as well, and how those things will be treated going forward from 2023?
Yeah, top of mind, if things were a bit more normal and stable, the average understanding would have been trying to separate, the conversation between political correctness, and the need for reforms, knowing fully well that we're also in a pre-election year. But unfortunately, that's not going to be the case, because the 2023 election is looking like it's going to be a different election, not necessarily in form of outcomes, but in form of engagement. For outcomes, we can't say yet because still a developing story. For engagement, yes, with the way things are now panning out, there's a lot of divergence in views, there's a lot of stronger opinions, you can see more stronger candidates, representing at least the top two parties, and then another party rising as an underdog, sort of. So the story is developing, and it's looking like a very interesting story in itself. However, it brings some more uncertainty to the table. Uncertainty because of the performance of the current party. Uncertainty because of the opposition party not really doing its work as an intelligent opposition over the years. And uncertainty in form of what the final outcomes will look like. So I think investors will want to hold back a bit, to reconsider options, even domestic investors as well, to reconsider options, and also to state that these are probably reasons why we see a lot of direction in the form of foreign portfolio investments, not really direct investments, and all of that. So I'm optimistic that things may get better, but then again, it's still a function of how the political narratives play out, because it's likely a year of correctness than a year of reforms. And if the pendulum swings to more of correctness, then we may see a further drag or further nuances in terms of spread and engagement with FDI and FPI and the rest.
All right. Thank you, Gospel. We'll leave the conversation at there for now. Potential, promise, perception, and nuance. A lot of that's happening in this conversation. Thank you so much.
Yeah, thank you so much for having me as well.
All right. And one thing I'm definitely taking away is that the fact that potential does have a lifespan. Nigeria being the continent's largest economy is something that we like to tout. But beyond that, what does it really mean for the average citizen? What does it bring into the country? And with the notice of decline in FDI as well as FPI over the past several years, the questions are going to be for those who are the policymakers and the next generation of leaders for the country. You're watching Business Edge, and if you're just joining us this week, this is not how we wrap up the show. As we told you yesterday, Business Edge is now 1 hour, and as we took business headlines from the African continent at the top of the hour, Lekan Onabanjo is standing by right now to give you the latest on the international business scene. Lekan, I'm handing things over to you.
Thank you so much, Tolu. It's been a beautiful day, and of course, the discussion has been very robust. And it's time for me to take you through international business news this morning. And we'll start off with the hike in the cost of prices globally, even as it affects America. Now, the U.S. Federal Reserve officials, beset by ongoing high inflation and a weakening growth picture, will on Wednesday lay out how they think their increasingly difficult goal of cooling the economy without sending it into a tailspin may play out in the months ahead. The thorny predicament will be on display as Fed policymakers are expected to deliver their second half percentage point interest rate hike in a row and issue their latest projections through 2024 and beyond for economic growth, unemployment, and inflation. This will signal the speed and scale of rate rises which policymakers believe are needed to quash inflation at a 40-year high. The meteoric rise of the digital economy being free from tariffs that apply to trade in physical goods may come to an end this week as a handful of nations threaten to scrap an international ban on digital duties in a game-changing bid to draw more revenue from the global e-commerce market that the United Nations estimated at $26.7 trillion. If governments fail to reauthorize the World Trade Organization's e-commerce moratorium, it could open a new regulatory can of worms that could increase consumer prices for multinational companies, with the International Monetary Fund calculating that a part of the digital economy could ultimately deliver a 6% hit to global economic output over the next decade. According to the Paris-based Organization for Economic Cooperation and Development, nations could draw somewhat between $280 million and $8.2 billion in annual customs revenue. New digital tariffs will also be harmed and will harm global growth by reducing economic output and productivity. Leading UK and US pension investors managing more than $1 trillion have launched a campaign to stop companies using dual-class share structures that concentrate voting powers in the hands of certain shareholders at the expense of others. Launched by British Railways pension scheme, Railpen, and other investors, companies with dual-class structures have two or more types of shares with different voting rights: greater voting rights for founders or early investors, and another for other shareholders with less voting power. The imbalance means most investors have less control over how the company is run and can make it harder to collectively push back on unfavorable issues. Big fund managers have fought with little success against the arrangement for years, arguing that such structures often erode shareholder rights and undermine long-term corporate performance. Let's also tell you that BHP Group, a multinational mining, metals and petroleum public company in Australia, is open to taking on a partner as it builds its first potash mine in the Canadian province of Saskatchewan. BHP last month said it was looking at accelerating the Yasin, Saskatchewan project by a year amid tight global potash supplies after Russia's invasion of Ukraine. Prices of the crop nutrient have soared since Western sanctions were imposed against Russia over the invasion. A direct rival, Nutrien, the world's biggest potash producer based in Saskatchewan, last week also said it plans to boost potash capacity by 20% by the year 2025. Russia and Belarus, who face sanctions, are the world's second and third largest potash producers, while Canada is number one. Meanwhile, Russia earned nearly $100 billion, that's about 82.3 billion pounds, from oil and gas exports during the first 100 days of the war in Ukraine, according to a report. However, the revenues have been failing and falling since March as many countries shunned Russian supplies, though it remains high, the Independent Center for Research and Energy and Clean Air said. It also warned of potential loopholes in efforts to curb imports from Russia. The EU, US, and UK are among those who pledged to cut Russian imports. But the Korea report found that Russia still earned $97 billion in revenue from fossil fuel exports from February 24 to June 3. Now, the European Union made up 61% of these imports, worth approximately $59 billion. And that's what's happening on the international business scene. In case you do not know, the future is here in terms of monetary exchange. But how stable are digital currencies? Do stay tuned, because after this break, it will be time for Crypto Watch. Welcome to Crypto Watch on Business Edge. Now, according to reports, Bitcoin, the world's largest cryptocurrency, fell 15% on Monday, its biggest one-day drop since March 2020. Bitcoin is down about half this year and over 20% since Friday alone. Since its record high of $69,000 in November, it has slumped nearly 70%. Now, Bitcoin clawed its way to positive territory after falling as much as 7.3% to $20,816, its lowest since December 2020. It was last up 1.1%. Celsius Network, which has around $11.8 billion in assets, offers interest-bearing products to customers who deposit crypto at its platform. It then lends out coins to earn a return. So we'll be discussing issues as regarding crypto this morning. And after weeks of uncertainty about the long-term viability of the DeFi lending platform's outsized returns, Celsius Network halted withdrawals, swaps, and transfers, sparking a broad cryptocurrency sell-off. Now, following the Celsius statements, crypto markets plunged, with Bitcoin plummeting as about 14% to its lowest level since December 2020, and other key coins such as Ether also falling substantially. So joining me this morning to unpack the discussion and this issue is Olumide Adesina, as a financial market analyst, Quantum Economics. Good morning to you, Olumide.
Good morning.
All right, so now it's been a bearish couple of weeks for major cryptocurrencies around the world, and it's been estimated that $200 billion was wiped off the market. So tell us, what's actually triggering this downturn?
Yeah, thanks for having me once again. So it's a factor of three things. Look at the macroeconomics. We tell you that we have high inflation across many markets. In the United States, it's 4-decade high. In Germany, it's all-time high. In the Western market, in Ghana, it's about 27%. So that pretty much tells you that we are in an era of high inflation, and that was caused by the fact of so much amount of money brought about quantitative spending, stimulus package during the COVID-19 era, and that really trickled to the market. And surprisingly, you saw the crypto market in the span of 5 years going from $14 billion to $3 trillion before moderating less than $1 trillion. So pretty much now the US Fed is trying to concentrate on tackling inflation, and they've become very aggressive towards that. So we're seeing the cost of borrowing going up, meaning that investors have little funds to pay around risky assets, including the crypto market. And that's why we have seen a deceleration in prices, including gold stocks. So basically, what this translates is that we have seen an exodus of funds away from the crypto market, and pretty much that's where we are in this situation. But having said that, also, we are also seeing systemic concerns in the crypto market. First, we saw what happened to a stable coin that had accelerating functionality. I'm talking of Unilateral USD, in which he had to depeg. And because it depegged, investors lost a lot of money. And the reason why it created so much panic was that this is kind of crypto that usually should have the same value with the US dollar. So it fell as low as 20 cents at one point, before even trickling down to as low as 6 cents. And that really triggered so much panic, and we saw a meltdown with different crypto assets. Then in the follow-up of that, we saw that major lenders in the space also got exposed because they had exposure in Bitcoin and other leading altcoins. They had drawdowns because of the price depreciation, certain price depreciation. So some of them that offered high lending rates could not meet up, and that's why we saw recently the top crypto lenders, having to restrain withdrawals, and that really triggered panic. So it's a mixture of three systemic distortion in the crypto market, the macros, taxation, concerns, and the aggressive approach by central banks.
So, Olumide, talking about Celsius Network, according to what we heard, it paused withdrawals, transfers, and swaps on its platform. Is it because of the bearish outlook, or what is actually the decision behind that move?
Yeah, so we don't really have direct information on that, but it's really pretty much on the fact that they have exposure to crypto assets, particularly Bitcoin. It was rumored that they have about 150,000 Bitcoins, and definitely you understand the valuation Bitcoin is trading right now, and that means that they might not be able to meet their status quo in terms of investment mandate. So I think it was unsurprising to see some form of restriction. But you see, the thing that investors need to understand is that why the panic is so much is because these things are automated. They work like your normal traditional bank, where you put funds and there's a contract where at this point you get a coupon. But the difference between decentralized finance and traditional finance is that usually they're automated. So an interference was what made investors suspicious. Also, the fact that they have offered lucrative rates, as Celsius was about 18%, while you get in traditional finance, you get as low as 4%. So you could see the differential, and that's what led to investors going to that side.
Okay.
But having said that, I think the concern right now is that how they'll be able to meet their investors' mandate, though some crypto entities are offering to buy out their investment or pay them out, but that has already created panic, and that's what we saw yesterday.
All right, thank you so much, Olumide, for joining the conversation. We could have continued, but then we are pressed for time. All right, so there you have it about cryptocurrency and decentralized finance. So, Tolu, you begin to wonder the volatility as regards the crypto world and the crash that it comes with it. Of course, we understand that a lot of money is being lost. So then, is there anything that can actually be done to actually, ensure that cryptocurrency is stable and viable for the unforeseen future? Tolu, what do you think?
Let me tell you my true thoughts, and if you want to hear them later, it's like I'm not sure. Because when we look at the highs that crypto experienced a year or so ago, and we're hitting the particularly Bitcoin as it may be, we're hitting the $50,000 mark. It was just a situation where nobody knew what was to be expected. And we're seeing it once again that with crypto, it's so much harder to predict what's going to happen. It's so much harder to put together some of the fundamentals that we're particularly used to in the financial system to sort of get an idea, because it's so decentralized and not the regulations or the players involved that are traditionally part of the whole equation. But it's something to watch. I know a lot of people who are into this personally might just be looking at holding it. A lot of the personal finance experts we talk to at the end of the day say crypto is a long-term investment. If it's something that you're trying to look for to hold on to and maybe next week make a quick buck on it, it's better that you just leave it. So right now the crypto markets are on red. As they would say, there is blood on the floor right now. So if you have the stomach for it, leave it where it is and just watch how things play out. And of course, make your research and decide what you need to do with what you have invested there.
All right, so Tolu, you can take it from here.
All right, thank you so much, Lekan. The show is slowly winding down for today, but we want to, of course, give you an opportunity to find out a few more things that are happening in Nigeria. Now, the country's Minister of Finance, Budget and National Planning, Zainab Ahmed, who presented the first quarter of 2022 gross domestic product report to the Federal Executive Council, has reported to the council that inflation has started going upward. And I think many people on the street could have told her that. According to her, this growth shows gradual economic stability from the recession in 2020. But the burning question now is whether this growth has any impact on Nigeria's food market prices. News Central's Bettina Nweli tells us more.
Aspiration to lift its entire population out of poverty by 2030 presents a serious challenge. Even before the COVID-19 pandemic, 4 in 10 Nigerians lived below the national poverty line.
Insecurity remains to play a very big factor in the rising food prices. Things have not gone better, the past few months with respect to insecurity. Most of the items are, produced in the rural areas, and farmers have not been able to go to their farms. Those that have to do with their farms have to negotiate with the bandits, with all forms of criminals who have been terrorizing these rural areas.
As of April 2022, the food inflation rate in South Africa stood at 6% compared to the same month last year. In Ghana, food inflation is projected to trend around 7% in 2022. In April of this year, Zimbabwe's food inflation rose from 75% to 104%.
As of January, a couple of ogbono sold for 2,000 naira, but now the current price is like 2,500. But there are still some ogbono that is sold for 2,200.
Tẹ́lẹ̀ ẹ̀wọ̀ ẹja yìí is 300 naira o, 300 naira. Tẹ́lẹ̀ ní ìsìn báyìí ní ìsìn 700, 1,000. Ebi wá pọ̀ ìyá pọ̀ ẹjọ́ o 50 naira tẹ́lẹ̀. Now it's 200 naira be this o, 100 naira rẹ̀ ẹ̀bà rẹ̀ 200. Ẹ̀bà wa òwe sànú wa o.
As at December, we sell this one for like 300 naira, but now it is 500 naira. The thing keeps getting higher every day. And this one was about 800 naira then, 1,500 naira for half pints. So the thing is always increasing daily. Garri was about 500 naira before, but now one plate of garri is 1,100.
Many observers believe that the high level of violence and insecurity in the country is a byproduct of economic disempowerment especially among the thriving youth population in Nigeria. Unfortunately, the same can be said for Africa in general.
For example, in the Q1 of 2022, the growth rate was positive, which was over 3% of GDP, was over 3%. So, I don't expect us to have a negative growth rate at the end of Q2. Q2, is going to end by the end of this month, okay? I don't expect us to have a negative growth rate.
If Nigeria, and indeed the rest of Africa, is to get anywhere close to the 2030 target, one thing is certain. Each government needs to invest massively in agriculture. Bettina Nweli, News Central, Lagos.
All right, that is the report there talking about inflation and what it causes in Africa, not only in Africa, in Nigeria and every other part of the world in terms of money and what you can use to buy, or what you can buy with your money rather. So before we go, let's take you through some stories on NC4 to watch, the stories that we're tracking in the business world. And we start by telling you that African payments company InterSwitch has secured $110 million joint investment from Leapfrog Investments and Turner Africa Capital to scale its digital payment services across the continent. This investment comes almost 3 years since InterSwitch's last disclosed funding round, when Visa paid $200 million for a 20% stake in the company. And away from that, think tank Meridian Economics believes that load shedding in South Africa can be stopped by 2024, but that will require strong leadership from the presidency to see that extraordinary interventions on many fronts are implemented without any delay. Now, Nigeria's national electricity grid has collapsed yet again, throwing several cities, including Lagos and the capital, Abuja, into darkness. This is the 6th reported collapse in 2022, although it is believed the figure could be higher. The government blames poor management and low gas supply as the major cause of the repeated breakdown. And this current episode, stated late on Sunday, is said to be lingering on. Finally, crude oil prices have risen by $1 in volatile trade on Tuesday as tight global supplies outweighed worries that fuel demand, which would be hit by a possible recession and fresh COVID-19 curbs in China. And those are the stories on NC4 to watch. Tolu, take it from here.
Thank you so much, Lekan. We'll be wrapping up the show now. Don't forget, at the top of the hour, we brought you news that Kenya and Uganda seem to be heading for another trade dispute, as one of the countries has now, that is Kenya, has reintroduced a new tax, or rather an old tax on eggs from Uganda. And international business also let you know that even in the first 100 days of the Russia-Ukraine war, Russia was able to make some money. Russia actually made an estimated $100 billion when it comes to its oil and gas exports, but those have been dropping since March. So those are also stories we'll be watching to see how they play out. As always, thank you so much for joining us. You are watching Business Edge right here on News Central. Don't forget to follow us on social media at News Central TV. You can, of course, also download our mobile app, go to our website, subscribe to our channel on YouTube, and watch us on all the platforms we are available. At the top of the 12 o'clock hour West African time right here, News Central Now will bring you all the latest news and information from the continent and beyond. I'm Tolu Lokwe Adelaru Balogun. See you soon.